What's going on, everyone? I hope you had a nice, relaxing weekend because we are set for an exciting week in the stock market. On Friday, 58% of stocks in the S&P 500 closed up in the green. And looking at this week, while the market recovered last week, we are heading into some pretty strong resistance levels. Plus, we have more earnings on the schedule, as well as some crucial inflation data. So there is no doubt that this week's going to be an exciting one, and there should be some pretty good opportunities offered. So in today's video, we're going to talk about all of that, as well as some good setups and important things to keep your eye on. Tom will not be with us in today's video. He had some things he had to take care of, but we are set for a great video nonetheless. So let's not waste any time and let's jump right into it. First things first, the earnings calendar still has a couple of exciting stocks on the list, you can say. While most big tech stocks have already reported, we can see that there are a handful of exciting reports to pay attention to. Out of all of the ones on today's list, I would say the segment on Thursday before market open will be the most important, as Alibaba, Walmart, and JD are all set to report. When these stocks do report earnings, the stocks tend to move in a momentum-filled and just powerful way. So keep a close eye on these three stocks as the week goes by. But there are also some smaller stocks set to report as the week goes on as well, like Barrick Gold on Monday before market open, Home Depot on Tuesday before market open, and just a handful of other ones scattered throughout the week. So definitely keep that in mind. But realistically, the most important thing to pay attention to is this inflation data that is set to release 1 hour before the market opens on Wednesday. The inflation data and just I guess you could say the I word, inflation, has been something that the Federal Reserve has been fighting against in a very powerful way over the past couple of years. As we all know, inflation has been brutal, and everyone is trying to get it under control. While a lot of progress has been made, I guess you could say, in the war against inflation, the job's not done. That's the best way to put it. There's still more work that has to be done, and the most recent inflation data reading came in at 3%. While that is surely a lot lower than the peak of 9.1% back in June of 2022, there's still more work that has to be done to get closer to that 2% target range. With that being said, a lot of people will be looking at this inflation data report very closely because it will ultimately tell us on what the Federal Reserve is likely to do next. As we know, the Federal Reserve has been increasing rates now for the past couple of years, and they are getting a lot closer to cutting rates. We could see that on September 18th of 2024, the Federal Reserve is expected to cut rates no matter what. It's just a matter of how much they are expected to cut rates by. Basically, there's a 51% chance that the Federal Reserve is going to cut rates by 25 basis points, and there's around a 48.5% chance they're going to cut rates by 50 basis points. Depending, I guess you could say, at what level this inflation rate comes in at, as well as other factors, will give us a clear insight as to what the Fed will do. And what the Fed does will have a big impact on the market overall, because we all know that, rate cuts are coming. It's just a matter of how big will these rate cuts be, and depending on how significant these rate cuts are, will have a trickle effect into everything from the market to, just rates in general, and even real estate prices. It's very, very important, and that's why everyone watches these data points, like the inflation data, so closely, and that's why Jerome Powell has all the power that he has. So regardless, on Wednesday, 1 hour before market open, be ready for crucial inflation data. This will have a big impact on the market, and the data is just genuinely important. If the data comes in a lot higher than 3%, that can cause a big move, or if it comes in a lot lower than 3%, that can also cause a big move. But if it comes in right around 3% or 3.1% or 2.9%, it won't be all that shocking. So just keep that in mind and be ready for this data, because it will move the market, and be ready for it ahead of time. But another thing that's worth noting is that as we look at the market right now, we can see that the S&P 500 has been pulling back in a way that we haven't seen in a while. We'll put it that way. The S&P 500 fell in such a crazy way last week that the volatility index got to levels only seen since the COVID crash and the Great Recession of 2009. We could see VIX got to that 65 level again, which was only seen in the COVID crash and the Great Recession of 2009. While it may seem like everything is still good in the market, and by many metrics, it still is. It's, running along, which is fine. Understand that the volatility we're seeing is a lot more serious than most people think, right? When you have a volatility index rating only seen since 2009 and 2020, that does say a lot. And as we look at the market right now, on an intraday basis, from its absolute peak to its absolute maximum drawdown, there was a pullback of 10%, and that technically does bring the market into correction territory. But another thing worth noting is that on average, the market pulls back by around 14.2% per year in terms of like a max pullback. And on an intraday basis, we got to that 10% mark, and on a close over close basis, we got to that 8.5% mark. Regardless, whichever way you look at it, on average, the market does tend to pull back bigger and, stronger than what we've seen so far. So it is not unrealistic to expect that the market could potentially pull back more. This isn't to say it's going to come crashing and burning, but it is worth, looking at, again, historical data, like in this context, to be better prepared going forward, because while the market has been so strong over the past year, it's important not to get too caught up in all that bullishness and euphoria, and it's better to, I guess you could say, stay rational and continue to look at the market in an unbiased way and look at historical data as a, good reference to what the market can do going forward. Another thing worth noting is that as we head into the month of August, or as we progress through it, I guess you could say, there's a lot of bad stuff going on in the world still. Of course, the yen carry trade had a big impact in the market, and, of course, there's a lot of tensions in the Middle East, let alone other areas of the world, plus a crucial election coming up. But as we look at history, you can see going all the way back to 1990, there have been a handful of some pretty important events that happened in August, and like you could see as listed, so far this August bad event is the yen carry trade, and it only had like a 3.7% impact on the S&P 500, and that has been one of the slightest impacts that we've seen for August. So I guess it's just worth noting that as we look back at other historically not so good events, the market did end up having a bigger pullback than what we're seeing now. So going forward, remain skeptical and just treat the market and look at it in an unbiased way where, you're not, I guess you could say, beholden to one side, whether it be the bear side or the bull side. You're just looking to make money, and to do that, you have to just look at the facts and treat everything in an unbiased, realistic way. As we look at the S&P 500 right now, we can see it has been popping up quite a bit over the past couple of trading days, and while that's great, understand that we still have a broader, I guess you could say, downtrend at hand in the short term. Of course, when we zoom out, the market goes up a lot more than it goes down, but in the short term, you can't deny that the downtrend has been stronger than what we've seen anytime recently. Another thing worth noting is that while the market has pulled up a good amount over the past couple trading days, there are some pretty strong resistance levels overhead. Looking at those more specifically on SPY, let me go to the horizontal line really quickly. We can see that there is a good amount of resistance coming up right around like this 535 to 536 area, with even important levels going all the way up to like, 537.50 or so. There's a lot of resistance coming up, and this resistance has been pretty strong over the past year. So all the way up from like 535 to 537.50, this is a crucial area that sellers will defend pretty hard. So just understand that you might want to trade around those levels so you don't have to compete with all of the significant buyers and sellers coming in at these pivotal points. So understand that while the market's popping up, there's a lot of sellers waiting overhead, and the market has been making lower highs pretty consistently over these past couple of weeks, and that is not a good sign, and it shows that selling pressure is strengthening. So again, keep that in mind going forward. Personally, I would not be all that surprised if we did see, I guess you could say, the market struggle a little bit coming up to these 535 to 537.50 resistance area. Again, this is a level that the market has been defending hard, and it's not like there's, I guess you could say, all that much strength in the market right now. Plus, when you combine that with the not so good geopolitical situation, it does present an interesting risk profile in the market overall. So keep that in mind and keep a very close eye on those levels going forward. In terms of support, there's also a pretty big support level right around 528 on SPY, which will be worth watching closely. And as the market, or as the week progresses, keep a close eye on 524, as well as you could say this 518 support. These are all crucial levels to keep in mind going forward, and they do present interesting supply and demand levels to keep on watch for the week. But besides that, let's get right into the good stuff for today's video, which are some setups and predictions. A stock I'm watching very closely right now is Apple, and it's to the downside. So Apple is one of those big tech stocks that has definitely been doing better over the past couple of months, and while that's great, they don't have the best news right now. Not only did Warren Buffett sell half of his stake, but Apple's also a stock that has been lagging relative to other big tech stocks like Microsoft and Nvidia as two prime examples. Regardless, Apple stock has been selling off quite a bit over the past couple weeks, and it had a phenomenal recovery last week where quite literally every single day was green on a close to open basis, as we can see right here. But with that being said, I think that offers an interesting or a pretty good risk reward trade in the short term. The stock has been continuously making lower highs. It's been a relatively weak big tech stock, and it's coming to a point where not only is there a lot of resistance coming up on, I guess you could say, the market as a whole, but we also have a lot of resistance on Apple right around this 216.50 area, all the way up to you could say 218 and even 220. So I really like the risk, some of these big levels, if they break, is a potential stop loss, where in terms of reward, if we do see a solid rejection off of these levels, it would not be all that realistic to see Apple back to that 206 area, or even in a more significant case, maybe even below 204, which aren't even that major of support levels for Apple in the short term. Realistically, Apple has major support around $200 a share, and even 202.65 and 196. So I really like the reward to risk with Apple for this week in a bearish way. But again, it'll be important to use those major support and resistance levels, in your favor. So keep that in mind. But Apple's on my downside radar for the week. I like the reward to risk. Another stock I'm watching pretty closely right now is Alibaba. Chinese stocks have been getting pretty strong inflows in the short term, and they really just move in a way of their own. You can say they certainly do not move like U.S. big tech stocks or many other U.S. stocks. They just move independently, and when they do move, they tend to move with pretty strong momentum and power associated with them. Over the past couple of trading days, we can see that the uptrend with Alibaba has been accelerating, and it's been getting just better, right? With that being said, there aren't any major resistance levels too close ahead, and the stock is still very oversold in the grand scheme of things. Again, I think this all makes for a good reward to risk, where when we could look at BABA here, it's right around this $80 level, and in the worst case scenario, maybe it breaks below $79 and the play ends up just failing, where in a good scenario, this stock can get all the way up to 84 to 86 or even higher, right? And we could just tell looking by, the reward to risk skew and just the way in which this stock moves. I think it presents an interesting reward to risk, and I think it'll be worth watching very closely as the week goes on, especially as they have earnings on Thursday before market open. So we might even see a little little bit of a pre-earnings run-up. But either way, just keep this stock close on watch as the week goes by because it tends to have some pretty good moves. But besides that, let's jump right into today's momentum plays. And with the first one, we have CCL to the upside, and the level for this one is 1490. With the next one, we have SQ also to the upside with a level of 63. And then with the last one, we have Microsoft in both directions with the resistance level at 408 and the support at 403.40. Looking at Microsoft, Square, and CCL, which is Carnival Cruise Lines, these are all on watch for potential momentum plays. For Microsoft, we have both directions. So basically, if Microsoft breaks below the support level listed here, and it moves in that direction with some, decent price action, it'll be on watch for a bearish day trade tomorrow, where with the upside level, it's the same thing, just to the upside and the resistance level up there. But these levels also apply to Square and CCL. Again, both in bullish directions. So keep these stocks close on watch for tomorrow for potential day trades, if and only if they break through the levels I'm so used to saying that. Only if they break through the levels I listed. Tom is not with us tonight, obviously, but I guess it's just habit. But either way, keep these three stocks on watch for tomorrow. And let's jump right into today's $461,000 big money trade. And today we are looking at Intel. So basically looking at Intel, the big money put $461,000 into the Intel 19 strike call options that expire on January 17th of 2025. Looking at Intel, this stock has been getting taken to the woodshed, as some would say, over the past couple of years. The sentiment with this one is just about as bad as you can possibly imagine. And the big money is taking advantage of this extreme emotional event with Intel stock as they are buying Intel call options that expire in January of 2025. Looking at these call options more specifically, they are already in the money. They have a good amount of time to them, and Intel is at a point of what appears to be peak fear, especially as just over the past couple of months, this stock has fallen from $51 a share all the way down to less than 20. Also, when you look at, I guess you could say, the geopolitical environment, especially when it comes to Asia, like China trying to invade Taiwan, that presents some interesting risks to chip stocks that are kind of ruling the industry, where Intel is, I guess you could say a little bit different than the crowd in some good ways and in some bad ways. But that, if the situation with China and Taiwan were to develop, Intel could potentially benefit from that. But regardless, looking at Intel, the big money is getting bullish here, and I don't necessarily blame them. Again, they're getting in at a point of peak fear. The stock is at a extremely low level, and the semiconductor business is something that is crucial in today's world. While Intel has certainly been lagging behind quite a bit, and while they have been dropping the ball in many ways, shapes, and forms, there is still value to the company. And it's more so about which price is a good price. And the big money, at least in this context, is saying that $19.71 is a trade worth taking for Intel. So keep this one close on watch as the weeks and months go by. I think it's a very interesting setup, especially how badly Intel stock has fallen. But as we look at everything right now in the market, again, we have some crucial levels that the SPY is heading into. We have more exciting earnings. We have some crucial inflation data, and volatility is still here, and it's here to stay at least for a couple more months. The volatility index is said a lot over the past week, especially as it got to levels not seen in quite a long time. What's more important than ever is to trade in an unbiased way. There's ways to make money in both directions, of course, with options, but even with stocks. As we looked at the big market downturn over the past couple of weeks, ETFs like UVXY, which is something that Tom talked about quite a bit, has moved to the upside in a major way. And, looking at, you could say, opportunities that aren't always betting on the upside will be worth considering as these weeks go by. At the same time, there's a lot of money to be made in market downturns, not just by playing the downside as stocks fall, but also by you could say, using the opportunities that the market presents to buy stocks that you'd love to own at prices that you don't see available that often. For example, when the COVID crash hit in 2020, so many stocks fell by so much that just offered people, in some cases, like life-changing opportunities. And we see in every market downturn, when there's a lot of panic selling and fear happening, some traders, unfortunately, I guess you could say, get caught up in that fear, and it ends up not working to their benefit, while others take advantage of the situation at hand and use the opportunity to get some great stocks at great prices. I'm not saying the market is extremely undervalued right now by any metrics, but the main point is that as the market volatility continues to unwind and as the craziness over these next couple of weeks and the next couple of months with the election progresses, don't be afraid to strike when the iron's hot, so to say. And there are multiple ways to do that. Of course, buying stocks for the long term, but also, riding serious momentum waves in both directions. So definitely keep that in mind. And before we close out, I have to give a giant shout out to today's member of the day, I am Serve in the StockedUp trading floor. He made this post last week where he said, "What a time to be alive. What an amazing month. Couldn't have done it without Mike, Tom, Hunter, and SM Bot, my gorgeous, beautiful lady bot of the day. Time to enjoy Friday." And he posted just a great screenshot in the StockedUp trading floor. So huge shout out to you, I am Serve, and keep crushing it. If you guys are into short-term trading, definitely check out that first link in the description in the comments down below to get access to all of our bots, our weekly live events, the big money trades on the same day that they are made, as well as every tool you could possibly need for short-term trading. Again, if you're into short-term trading, the StockedUp trading floor is the place to be. The link for it will be that first link in the description in the comments down below. If you guys are new to the channel, consider obliterating that subscribe button to get our videos recommended to you more often. In every single video, we cover the most important news, information, events, and data to be aware of so you can be best prepared for the market. Besides that, thank you all so much for watching, and let's have an amazing week in the market.